Kevin is my dear colleague, and he runs not one but two businesses.
Yeah.
We will try to explore one of them today, try to understand how the system works, and maybe there is some other opportunities for other people to explore that as well. Can you, Kevin, tell me what is the business that you're working on?
Well, I started a 506c real estate fund in 2022. And for people that don't know what a 506c fund is, it's just a fancy legal term for a structure that allows you to raise capital from investors. And with a 506c, our investors have to be accredited, which means they have to have $1 million net worth and they have to have an income of $500,000 if they're a couple. And I think it's $400,000 if they're single. And what we've done with that capital over the last 3+ years is invested in US based real estate. So we'll typically buy a single family home or a small multifamily and then convert those into short-term rentals, Airbnb, or mid-term rentals, which are usually meant for people that are traveling consultants or people that are nurses or people that need somewhere to stay for 2, 3, 4 months and they don't want to be in a hotel that long.
Right.
And it's been great. We've been able to provide a return to our investors, and I've learned a lot over the last 3 years.
Nice. Are you basically mainly investing in Texas?
Yes. I would say all of the Sunbelt, so Texas and then the southern states, Alabama, Mississippi, Georgia. Florida we try to stay away from because insurance premiums are really high. In fact, they're so high, it pretty much eats up all the profit margin. But we love the Sunbelt, landlord friendly, relatively cheap prices, and then great to have people come in. Guests are great. You're not having as many squatters as you see on the East Coast and West Coast.
Do you have any example? Because there are other people are thinking, I have this money, I can buy a single family house or a condo. But the question is, can all this revenue coming from the rental cover my expenses? Or what are the strategies to say the location or what is the in demand? What are the checks that people have to consider to buy those houses for themselves so that they can make it revenue?
Yeah, this is probably the biggest hurdle or mistake that people make is they get too excited about the opportunity to buy without doing the due diligence ahead of time. It's all about underwriting the deal. And if you don't have experience underwriting, you don't want to look at all the data, you need to hire a team or buy a software that will allow you to do that. Because once you buy that asset, it's almost too late to go back at that point. We're in a market right now where if you make a bad mistake, you're not going to be able to sell it quickly like you could in 2018, 19, and 20. So I look at what are the average income areas or income in that area. I look at population growth. I look at if it's environmentally friendly. I want to stay away from states that have tons of tornadoes and hurricanes and fires. And then I look at what's going to bring someone to that area that they would want to book out an Airbnb. If there are no natural attractions or it's not a tourist destination, the days of making enough money by renting out your second or third bedroom to cover your mortgage are gone. It's a luxury experience, and we're seeing this bifurcation where there's a large separation from the haves and the have-nots. The people that are making it are a small population or percentage of the population compared to the people who are making it in short-term rentals. And unfortunately, you just have to do a good job of doing your due diligence up front so that you can buy the right asset.
Interesting. Do you mind sharing how much houses in your portfolio right now?
Yeah, we're downsizing a little bit, but we got up to 17. And
Wow.
we realized that when you scale that quickly, like we did in 2.5, 3 years, you run into operational issues, personnel issues, who's gonna manage all the tickets and all the cases. And now you have all these different technologies that are just adding on to each other. And it's like, man, I went from running really lean to I have 8 different technologies that are now causing me to have $7,000, $8,000, $10,000 a month of overhead. So we've adopted our strategy to go after bigger purchases with more units so that we can leverage economies of scale.
Is there any amount, the price of the house that you're targeting, above million or 2 million or $500,000?
Yeah, another good point. If we're going after a single family, that sweet spot is usually between 400,000 and 600,000. If you think about the average daily rate and occupancy rates, how often people are booking, you want to make sure that worst case scenario, you can cover your rent and you can cover insurance and utilities. So that is usually the sweet spot, especially in the Sun Belt. If I'm going after a multifamily, I like to look at somewhere around $150,000 per unit.
Interesting. And how do you combine this? On one hand, you have new build. On another hand, you have old builds. New builds, the builders, especially in Austin, they're covering closing costs, etc. And you have a new build house. You don't have to invest to renovate the house.
Yeah.
And you don't find all of these new builds closer to downtown or fancy places that attract tourists. But the old builds, you're covering your closing costs. You probably have a risk of renovating or missing something during the buying process. How do you handle those two conflicting points?
I think it's going to be 3 points that you're going to have to make sure that you're covering. One, you're going to have a killer agent that knows the area. Zip code matters, its location. So above all else, more important than the individual property is the location. So make sure you have a killer agent. Number 2 is, I think more today than ever before, you're going to have to leverage technology if you want to drive scale. So instead of me having to rely on my human manual effort to make sure that I'm purchasing the right asset, how much can I lean on AI to make the right decision when it comes to an individual purchase? And I think the third thing is just, again, back to the underwriting, making sure that if I'm going to go after a new build and they're going to offer me seller incentives, credits, and things like that, is that better than an older home that might be in a better zip code? Because I can't beat being in a bad location. I need to make sure that even if I'm getting a really good offer from a new build developer that's desperate, it still has to have the revenue potential to make sense. So those are things I look at.
I love that phrase, I cannot beat being in a bad location.
Exactly.
I think this is the mistake that I think majority of the people buying houses do, even for their primary purpose, but having that thought in mind, maybe something happens, I will turn into the investment property, but they miss these points. Location. So thank you. And the last question is that how do you find all these high net worth individuals, and how do you convince them that you are the right person to control and manage their money and invest in the property?
I'm going to give you the most frustrating answer that you've heard time and time again, Olfat. It's all about networking. I can't tell you how many times I've just gotten lucky and met the right person at the right time. If you don't like golf, I know it sounds cliche, but golf with people, just be genuinely interested in other people. And if you put yourself in the right places, you're bound to find opportunities. And people will give you that first break because they like you and they know that you're smart and integral. And then if you can deliver that first time, it's a snowball effect.